All right, welcome in. This is the Cow Guy Close, and I'm Scott Shellady. I'm the Cow Guy. I guess the jacket gives that away. How about this, though? It's undeniable that calls for a correction in the equity markets or a pullback, right? Especially at this time of year, they've grown louder and louder. Now, if you want to search for bad news, you'll be able to find it, right? Credit card delinquencies are rising. The housing market is a mess. The money supply is rising, and depending on which side of the aisle you reside, inflation's just around the corner, right? And this is where we coin the phrase, stocks are climbing a wall of worry. Well, our next guest, he's written about this in his research we saw earlier today, and he says this market continues to broaden out while more and more keep doubting and citing the valuations of stocks, right? And if this is their only argument, he says, it's a pretty weak one. Now, in bull markets, valuations at times are meaningless. You have to follow what the market is telling you, not what you think it should tell you, right? I couldn't agree anymore. That's good stuff right there. We're in a state of flux right now, transitioning from the last administration to this new administration. There's going to be some bumps along the way for sure, but from where I sit, the future still looks pretty bright. So that's a great way to describe our next guest. I think he's got some technical difficulties. We'll see if he's going to be on the show here, but we're looking for Eddie Ghabour. When he comes on, I'll take it until he does, though. What we've got happening right now is this. There's a kind of a cross currents. You know when you've got salt water that meets fresh water? It's called brackish water. That's where we're at with these markets. And I think that Eddie makes some great points in his research. And it costs me a lot of money. Now, you don't really learn in this market until you lose a lot of money, right? That's the unfortunate part about it, right? So you really kind of learn when you lose money. And I fought for 20 years of my career about what I thought should happen versus what is going to happen, right? And those two things are markedly different, and we're in that kind of period right now. I would look at all the details, I would look at all the data, I would look at all what everybody was talking about, and I would say, this is what the market should do. This is what I think it should do. But at the same time, you have to take a step back and take a 30 or 40,000 foot view look at things and say, all right, that's what it should do, but what's it going to do? What's the path of least resistance? How can the market really hurt the most people along the way? And when I say that, it's not to be ultra negative, but the market has a habit of trying to hurt the most people in the fastest amount of time. You hear, say, some of our analysts, Carly Garner is one of them, we talk about too many folks on one side of the boat. That's what the market likes to punish when everybody kind of gets the same point of view. Everybody's leaning on the one side of the boat. That's when the boat tips over. And so our analyst made some great points this morning in his research. Hopefully we can get him on here about what's happening in the markets and how the market will try to punish those that don't really take that point of view. And again, back to what I said about losing money. You don't really learn until it hurts, right? Because those things leave a mark. If you make money and it's too easy, you won't learn a thing because the money's coming in. That's what's always dangerous, especially with new traders. So when you sit there and you see this negative debits come through on your statement, you take time to learn how not to have that happen again. That's one thing that it took me, again, 20 years of my career, because you trade what you think should be happening and you're not really looking at what the market's telling you about what it's going to do. So those are some big things. Other things also that I would say would help those traders out there. There's a big trader named David Tepper. David Tepper runs Appaloosa Markets. Well, you know what? I just heard in my ear. We may have Eddie Ghabour. I think Eddie's there. Eddie, thanks for coming on if you're there.
Thank you for having me. Sorry for the technical issues today.
No problem at all, brother. We loved your research here this morning, and I talked to, just made a little bit of a diatribe about, when I was young, it cost me a lot of money. I used to trade what I thought should happen instead of listening to the market tell me what's going to happen, and maybe you want to take it over from there because I think you made some great points.
Yeah, I think that's the biggest thing that has people scratching their heads, right? The only negative thing that I hear bears that are trying to hang their hat on is valuations are too high, or the market can't go much higher from here. And they're hanging their hat on some data that looks like there's weakening. I mean, you can always find something negative from a data perspective, but at the end of the day, the markets will tell you whether it's bullish or bearish, regardless of what you think it should do. And so following trends, following some technical analysis to us is going to be more critical than what your fundamental story is or whether something is overpriced. And that's where we are. When you have bull markets and they go higher and higher, of course you can make a case that valuations are extended because they always get extended. And that works in both directions. That's why in bear markets, prices will go down much lower than what you think. So we are in a bull market. And this weakening of data that people are hanging their hat on just gives us even more conviction that the Fed is going to do what we need them to do to keep this bull market going well into 2026.
And how I explained it, yeah, I'm on board with you 100%. I explained it to, that part of when you've got fresh water that meets seawater and it's kind of brackish. We're in that change from the old administration to the new administration. 2025 is going to kind of be your brackish water as we kind of get through this adjustment period. I think things look fantastic going forward. There's been a lot of capital committed to this country through a lot of the travels that the president's been on, both domestic and abroad. But I also like what you had to say about looking, if you want to, you can look and find whatever news you want to find with your bias, right? That's a problem that people really have to get a hold of. If I want to find bad news, I can find bad news and I can build a bias on that. Or if I want to find good news. But that term, the market's climbing a wall of worry, really is a true term because yeah, there's a lot of things out there that can make us a little bit concerned about the market, but the market is telling us it's going to do something else, right? I mean, that's really your point.
Yeah, that's exactly right. It's like you said, you can think what you want the market to do or what it should do. But if the market's going against your thought, you have to have the humility to pivot and say that you're wrong. I've done that plenty of times in my 25 plus year career where fundamentally something looked like it should do something, but the market's telling me otherwise. And you either have to pivot or you're going to get whipsawed and lose a lot of money. And here's the interesting thing. This year has been really interesting in the sense that we've had a lot of headwinds and none of the policy and tax cuts and deregulation has even hit the print yet. That's going to be something we see at the end of this year and going into next year. And that's what has us excited is this market is broadening out. You don't see a broadening market when things are getting ready to fall off of a cliff and we go into a recession. So I love that the bears continue to hang their hat on a recession. I hope they continue to do that because that just gives us more and more conviction as we look at the data.
And you know what? Sometimes I say in a perverse manner that a market still needs those bears and those skeptical folks because that's what powers these markets higher, right?
That's exactly right. Once everyone gets on one side of the trade, that's going to be when this bull market run is over and you're going to have to pivot. But we are far from that. We are far from that. And I think we're going to get a little bit more weaker data and maybe even a high inflation print on the 11th. And that's going to give the bears even more excitement. But we are on the other side of that trade because there is, in our opinion, still quite a bit of upside in this market.
Yeah, when we were waiting for you to come on, I said to the folks out there that, look, this market likes to punish the most people in the fastest amount of time. And when you get everybody on one side of the boat like that, that's really easy to do. So if you're in the minority and you're watching this market climb a wall of worry, you're probably in a pretty good spot.
That's exactly right. And like I said, when you look at things like small caps outperforming over the last few weeks, again, that's just another point showing us that we're not in a bear market, and you got high yield spreads are tight. Wow. So when you look at the fundamentals of the market, forget about valuations. The market's telling you it's a risk on environment.
I agree. That's great stuff as usual. And the Fed's going to be starting to cut rates after that jobs number we got. Eddie, thank you very much for coming on. Eddie Ghabour, all the way from Delaware.